Hello, everyone, and welcome to Your Finance TV. We have a very special guest with us, and it's sort of a regular on the show. It's Gary Brode from Deep Knowledge Investing. How are you, Gary?
Hey, Dux, thanks for having me.
Uh, Pleasure to have you with us. Now, as we jump into this, we're going to talk all things about, well, not all things, but I'll focus a little bit on the US markets here and a few different things that I'd like to ask you questions about. But before we do that, don't forget to click on that like and subscribe button below. All right. The FOMC minutes showed that we have divided Fed, and it's adding to upward rate pressure. Many pundits are saying that we are close to done with rate hikes and that we've avoided a recession. Gary, do you think that the Fed is done with hikes and that we have avoided this recession?
All right. So first of all, I don't know that the Fed is actually divided. You have a lot of people saying we need to raise rates and a couple of people saying, let's hold rates where they are now and raise them later. There's exactly nobody saying they need to lower rates. So do I think they're done raising rates? Absolutely not. There's no possibility they are. And by the way, if anybody had any doubts, today's payroll report will tell you that's simply not going to happen. And we've been making this point for 13 months now. Deep Knowledge Investing warned people about persistent high non-transitory inflation in November of 21. By June of last year, June of 22, all the pivot people were out saying, the Fed has to pivot to lower rates. And we were saying it's not happening. At some point it'll happen, but not yet. And we got a bunch of 75 basis point rate hikes. And, every month, every meeting, the pivot people are saying, you have to pivot, you have to pivot. Well, no, they don't. They're not going to. Powell is explicitly clear. Every time he's in front of a TV camera, he uses the words higher for longer. They've put that in writing. I don't know how much more clear they can be. And the conclusion that I've drawn is that it's not so much that most people care whether rates are higher or lower or have a knowledgeable opinion on what the Fed's going to do. I think there are a group of asset gatherers who can turn out great returns when rates go to zero and we blow up huge asset bubbles, and that's good for their pocketbook. And my response to that is, okay, well, I understand why you like that for your business, but it's not the right move for the rest of the country. And my message to the rest of these people is if you are an asset manager and rates are going higher, you have options. You can take risk off the table. You can lower your exposure. You can short something. You can shift to defensive sectors. You can own things like gold, silver, Bitcoin, energy. There are lots of things that you can do in what they term a bad market. It's not a bad market. It just, isn't necessarily easy to make money doing nothing. And if you are an asset manager and you need the Federal Reserve to lower rates to zero and blow up asset bubbles to turn out positive returns, then, maybe you're not adding a lot of value. And so I think there's controversy on this and in, the financial Twitter, the FinTwit community, simply because it grabs a lot of attention. You have a lot of people with large followings who are talking about this, but I don't think Jerome Powell cares. I don't think he cares if he throws us into a recession or not. He wants to be the next Volcker, not the next Burns. Volcker was the guy who sent rates to the high teens, almost to 20%, to kill inflation. Burns was the guy before who let off when inflation was in the 4 to 5% range. Hey, that should sound similar to everybody listening to this. That's where we are now. And we ended up with a recurrence of inflation. And by the way, that particular round of high inflation, up and down, mostly up, lasted for about 16 years. We're about 18 months into this round. So anybody saying that Powell should let off the gas because he's got to save the economy, he doesn't want people to be cursing his name for the next 14 and a half years.
Well, he's going to go in the books as Mr. Disinflation, right?
Well, and that's great language there, right? The first time I heard the term disinflation, I actually had to go look it up because I thought, like everybody else did, that it meant, okay, wait, inflation is coming down and we're going to have lower prices. But that's not what it means. Disinflation is a reduction in the rate of inflation. So if first of all, I'm a believer that the right and proper moral correct rate of inflation is zero. The Fed saying 2%, well, that, over the course of a 40-year working life will take more than 50% of the value of your savings. It's theft. It's slow theft, but it's still theft, right? So the right level is zero. But fine. So the Fed's aiming for 2%. And if you have inflation go from 9% to 5%, everybody's celebrating, saying we have disinflation. But if you're trying to buy, food, fuel, heat your home, pay the rent, put gas in your car, all of a sudden these things really do matter. And 5% increases are blowing out the budgets of huge numbers of Americans, and saying, well, your food bill is up, was up 12%. Now it's up 8%. Hey, it's gotten better. No, it hasn't. It's just getting worse more slowly. Things are still becoming more unaffordable. It's just the rate of change has slowed. And, listen, for those of you who loved high school calculus, yeah, it's a second derivative calculation. But for the rest of us, we're dealing with actual price changes as opposed to the rate of change, and prices are still going up. We saw the same thing. I actually was tweeting about this the other day. One of the big sell side firms came out and they were tweeting about how, we had lower prices because, inflation had gone, I think, 5%. And my response was, these people don't know math. It's just, you have higher prices. It's just the rate of increase is slowing.
All right, let's move countries. Last year, we spoke about Japan, and every fund we seem to speak to at the moment is bullish on Japan. Saw a quote from a portfolio manager saying that nothing changes quickly in Japan. But with the Nikkei up more than 27% year to date, is something changing in Japan, or should investors be wary about Japan?
So in terms of the Japanese equity market, I don't know that I have an opinion on that, but let's talk about why and why it's hard to have an opinion on that. Last year, the Japanese yen started at about 115 to the dollar. And at some point during the year went to 150 to the dollar. So what happened was the value of Japanese currency had plummeted by 30% against the US dollar. So if you are an island nation without a lot of natural resources, without energy, and you have to import, and the value of your currency has gone down 30% in the course of a year, and it's recovered a bit since then, that's a situation where your costs can very quickly get out of control. And now imagine you're a company like Sony, and they still make phenomenal electronics there, but any components they're bringing in have gotten more expensive. And the yen price, it really depends on whether they're pricing in yen, pricing in dollars. The point is, when you have a currency that's this volatile and this manipulated by the Bank of Japan, it becomes very difficult to figure out what's going on with these companies. And the reason we tend not to think about that a lot in the US is because for most of our lives, inflation in the US has been relatively stable. Not good, but relatively stable. And we just price things in dollars. And that's been, again, a relatively stable currency, even though it's lost 40% of its value since 2000. But when you have 30% moves in 1 year, how do you price this? And to make things even worse, in the US, we have a manipulated market. The Federal Reserve, by keeping interest rates at or around zero and running up the Fed balance sheet to $9 trillion, this took place over 15 years. They blew up a huge asset bubble. And so asset prices are responding to decisions made by unelected bureaucrats at the Federal Reserve. This is not an ideal situation, but think about how manipulated the market is in Japan. Last summer, there were weeks where the only buyer of Japanese debt was the Bank of Japan. They are literally the market. They own most of their own debt. Their debt is 260%, or at least it was 260% of GDP last time I looked. They're still running huge deficits, and they're blowing through their foreign exchange reserves trying to defend the yen. And so let's just take a step back and look at this like reasonable, rational people. The Bank of Japan is holding the line on 50 basis points. And the bond market vigilantes have cracked that twice. Twice we've seen the yield on the Japanese 10-year go above 50 basis points. I'm looking right now, I've got it at 41 basis points. And that's crazy when you have currency that the minute they stop defending it is going to plummet. But it gets even worse, because if you look out at their 30-year, the yield on a Japanese 30-year bond is 1.2%, right? So think about this for a minute. You got a currency that can move 30% in a year, and your 10-year is trading at 1.2%. Who's buying that? The answer is the Bank of Japan, right? And even think about it, like forget compounding, which would make things worse. Let's say you have a 30% move. Okay, so that's 1% a year. Yeah, and I know with compounding, it's even less than that. So, that would push your yield on this to somewhere in the neighborhood of 2% for 30-year paper backed by a volatile currency with 260% debt to GDP. Again, it's worse now. This is the last time I looked at it. And a deficit, an annual deficit in their budget. So there's no universe where this makes sense. And they're basically in death spiral territory right now. Because here's the thing, if they don't keep defending the yen, it's going to plummet. And that's a huge problem, again, for an island nation that has to import everything, including energy. The other side of that is they raise rates, and that's what they need to do. But if they raise interest rates, what happens to their budget? When your debt to GDP is approaching 300% and you raise interest rates, all of a sudden you're running even bigger deficits. And the only way the Japanese are going to be able to deal with that is to print more yen. When you do that, you increase the money supply, more inflation, you have to raise rates again. Oh no. Right. And so basically they're in death spiral Ponzi scheme territory right now. Any Americans looking at this or Europeans looking at this, don't be too smug, right? The European Central Bank, the Bank of England, the US Federal Reserve, aided by huge deficits in the US Congress, we're all heading in the same direction. Japan is our proverbial canary in the coal mine right now, because as they go, that's going to be the model. And Europe next, and then England, and then, the UK, and then the United States. That's sort of the direction all of this seems to be heading.
All right, well, let's try and find something a little bit more positive to talk about then. Let's go back in time a little bit. A couple of years ago, you recommended Bitcoin to your subscriber at Deep Knowledge Investing. And don't forget, everyone watching this, like to go to Deep Knowledge Investing to try and subscribe, or maybe even Gary will let you in to subscribe. But it's been a roller coaster ride between then and today. With all the speculation surrounding the prospect of an SEC-approved Bitcoin ETF, what do you think the future holds for Bitcoin?
So I think there are two things that matter to answer that question. The first one is long-term. Anybody who's serious about Bitcoin doesn't really care what the government's going to do, right? People are focused on regulation and waiting for the government to give you permission. So for everybody listening to this, Bitcoin is permissionless. You can buy Bitcoin without the Treasury Department or the SEC or the Federal Reserve giving you rules and guidelines. You don't even need a note from your mother. You can just buy Bitcoin. And, people say, well, what if the US were to make it illegal? So what, right? You can't stop that network. It's decentralized. There are thousands and thousands of nodes all over the world. The only thing you can do is unplug yourself from that. And, with VPNs and the fact that pretty much every American has access to a computer and cell phones, there's no practical way for the SEC or the Treasury Department or Elizabeth Warren or any of these people to stop it. And so long term, we've looked at the huge inflation, which is basically debasement of fiat currencies. That's a really fancy way of saying that as central banks print more money, as the Congress of the United States or governments all around the world run massive deficits and finance them by printing more currency, the price of things goes up, right? So the fiat currency you have, your dollars, your yen, your pounds, euros, they're all becoming worth less every year. And people who want to opt out of that correctly see Bitcoin as a great option. And you don't need permission. Now, regarding the permission side of things, the one thing that I think will help is institutional acceptance. Now, does Bitcoin and people who use Bitcoin need that? No, they don't need that at all. But here's the situation you have. Right now, there are roughly 19 million Bitcoin in existence. Another 2 million will be mined over the next 100, 150 years or so. And that's it. Of that total, approximately 3 to 4 million have just been lost. These are the people who had, thousands of them on a computer hard drive, threw them out, couldn't recover their password, didn't remember. And people say, how could that happen? Well, when they bought it at 10 cents and they had 1,000 shares, it just wasn't worth it to start digging through landfills looking for your computer and trying to figure out your password. But about 3 to 4 million of the total have been lost. And then you have millions more that are in what are called diamond hands. These are the people who are not selling ever or at anything resembling the current price. And people say, well, what if it were to double? They're still not selling. What if it hits 100,000? They're still not selling. So when you have institutional acceptance, and we just got ETF applications from BlackRock, from Fidelity, these institutions have trillions and trillions of dollars between them. Even a 50 basis point position, 0.5%, a 1% position is going to move the demand curve because you can't change the supply. The existing supply of Bitcoin grows by about 900 per day. And that's it. And so if BlackRock comes in and they say, we want to buy billions of dollars of Bitcoin, you have to buy it from people who are already holding it. You can't mine it any faster. And so when that happens, you have a massive amount of demand. And Dux, to give you a sense of how rare and inflation resistant Bitcoin is, there will be a total of 21 million Bitcoin mined, not a single one more. Right now, there are about 44 million millionaires, US dollar millionaires in the world. So if every millionaire in the world wanted to buy one Bitcoin, they can't. And that's assuming that the full supply is available. So good luck. Go for it, guys. Anybody who saw this coming has loaded up already. And if you're watching this and you think, BlackRock or Fidelity buying billions of dollars of Bitcoin might be good for the price, especially when you can't change the supply, right? You have a supply demand curve. If you can't change the supply, the price is going to be the thing that has to adjust. So when that happens, I think, institutional acceptance will change the supply demand curve and send pricing up. And, this is one of those rare situations where you can buy ahead of buying pressure. They're signaling we're going to be in the market buying this. This is one of these rare situations when you can buy ahead of the big money here without any kind of inside information or inside trading or inappropriate illegal action.
Yeah, well, it's not regulated by the SEC, so there's no such thing as insider trading then for it, is there?
Well, it's also not you're right, but it's also not insider trading when these companies announce in public, we're filing for an ETF. We want to start buying it. Our clients want this. It's not inside information. It's been in every newspaper. It's been on Twitter. They've made public announcements. They filed documents with the SEC. It is really one of those just rare situations where you can buy ahead of a massive amount of buying pressure without breaking the law, without doing anything inappropriate.
And we've been talking about it in Crypto Revolution on Your Finance TV as well.
That's right.
Gary, thank you so much for your time. We really appreciate it. Some great insights here and a lot to think of. Thank you very much, and we'll talk to you again soon.
Thanks, Dux. I appreciate you having me.
And for everyone else watching, good luck investing.